What's up, my Milk Money Millionaires? Josh here. Did you all survive today? Hopefully you did. Anyway, there's some craziness in the market, so I just wanted to give a quick update to all y'all, go through some of the things I'm noticing in the charts, and give you some ideas of what to do going forward. It's been really interesting because depending on who you are and the type of investor you are, you might be thinking that the market is absolutely collapsed, or you think that this is just a normal random Thursday. So it's kind of depending on what you have invested in. But we'll get into the two different market kind of idea here in a second. So looking at the VIX, as you can see, we do have a spike in volatility here. We had a spike last week when the yields started rising. Then we had that really great day where the market snapped back. Everybody started feeling good again, and the VIX cooled off, and now the VIX is starting to climb again. So we'll see if it turns around tomorrow. Do we get another snapback day after such an insane day today that was reacting to the news of Jerome Powell saying that they're not going to do anything about rising rates? Or does this VIX continue? And so one thing to keep in perspective, with everybody's feeling like the market is absolutely getting clobbered and certain segments of the market are getting clobbered, overall the fear is still at a relatively low level. As you can see, early February it spiked higher. Last fall when we had the dip in November, it spiked higher. So this could mean that there's a lot more room to go, or that. So the interesting thing about the two market idea, if we look at the Dow Jones, we've had this uptrend over since last fall. Nice, slow, steady uptrend. We had one dip a month ago, and then a quick recovery, and then this quick little spike before we started having our correction. Now, while the Nasdaq has been melting down, the Dow has been holding relatively steady. It just finally this week broke through this uptrend, and it's kind of still holding steady in this line of support. So the Dow really is only down a small amount off of its highs. So the Dow really isn't freaking out. If you've been buying blue chips and value type stocks, which I've been trying to recommend more and more of those, like LMT and Rocket are on two of my value picks that you can see on my site, on my channel, you're not getting hurt as much. Some of the banks that I bought, basically even. Okay, so the oil stocks I bought are doing well. So you're not freaking out as much. However, if you are in the Nasdaq, you are feeling a lot more pain, particularly if you are in the ARK section of the Nasdaq, which we'll get to in a second. So anyway, I wanted to make an update today because of the Nasdaq particularly has shown some very bad signs today. And so I just want to update you if you weren't sure what to do. Now, one quick note about technicals is that it's not an exact science. The charts are just a way to read what has happened. And then some traders believe that they can take what has happened and get an educated guess about what will happen, but we never really know what will happen. But I do want to point out a couple of key facts. So with the Nasdaq, it was in the steady uptrend. It broke through. That's when all the panic started. We had this volatile sideways action, and then it broke down again. Now, this is very bearish because we attempted to bounce back up and stabilize, and then we broke down again. So that's bearish sign number one. Bearish sign number two, I guess bearish sign number one was breaking the uptrend. But every other time we had kind of tested and broke the uptrend, those were buy the dip moments, and we kept continuing. This time we stayed below it. We consolidated. We had some strong green snapback days, and then we plummeted again. We've had 3 strong down days in a row. And so the key bearish signal that we got over yesterday and today was this break of the head and shoulders neckline. So one of the most reliable patterns, I believe, is kind of these head and shoulders tops. Now, it's not a huge head and shoulders pattern. The longer and bigger the pattern, the more reliable and the bigger the reversal. This is relatively small, so this might not be too crazy. But anyway, you do definitely have one shoulder here, the head here, test back a small shoulder here, and we're holding down below. So once you break through that neckline, you need 2 things to happen. You need to break through it to signal a possible bearish reversal. Then you usually need to retest it or follow through. So the fact that we broke through the neckline is bearish. The fact that the next day we followed through is also bearish. However, we might get a snapback to try to retest. So that's going to be the key point. If we can retest this level and close above the neckline and start to hold some support and price action above that line, then this downtrend is broken. Okay, temporarily at least. But for now, as long as we are under this line, we are in bad shape that we're going to continue a bearish downtrend, especially if we test it and turn down again. I would be really worried that we're going to have a good solid correction. So we're already down 10%. in these NASDAQ stocks. Who knows how much farther it could go. This could totally snap back and be done. Today could have been a capitulation day. We had a big reaction from the Fed news. Sometimes when you have big reactions and big events, that ends up being the end of it. Sometimes it's a trigger. So we really don't know, but I did want to point out that this head and shoulders was broken, and that is a very bearish sign. I am not buying the dip until I feel like the dip is over. And you never really know, but I'm going to wait because I feel like NASDAQ has some very strong negative things that has to fight against with the rising 10-year treasury, which I'll pull up in a second. And so I don't really trust a rebound yet until it proves it's in an uptrend. So I'm going to watch this closely. And what I actually have been doing instead, once it broke through this uptrend, to protect my portfolio, I bought SQQ. So if I pull up SQQQ, it's actually 3 Qs, SQQQ, it's short the NASDAQ or short the QQQ, okay, which is the ETF for the NASDAQ. And so what is supposed to happen is as the NASDAQ goes down, the SQQ will go up by, let's see, is this a 3x? Yeah, a 3x amount. So if we have a bad day in the NASDAQ, it's down 1%, your SQQ will be up 3%. So that helps you kind of hedge and counter out your portfolio a little bit. So if you feel like this trend is going to continue and you don't want to sell all your stocks, maybe you can buy a few hundred shares of the SQQ. So I bought that when the trend broke, and that has definitely saved my portfolio. Today has been even, which feels very good when everybody else is panicking that your portfolio is sideways. So I would like to be up, but hey, you can't get greedy, right? If this were to continue to plummet, however, I'm going to start making money on the way down. And if I really believe that we're going to have a downtrend, the other thing I was doing, I'm only doing a small position of this because I don't want to take huge risk trades, but I am buying puts on ARK. It has already moved quite a bit, so it might be a little late to be chasing. However, if this stuff is breaking down, there might be a lot more room to go. So the similar pattern with ARK, this is kind of where the breakdown happened, the ARK stocks. It's not all ARK's fault, but there's like a momentum trade, or not momentum, like a meme stock movement that we've had throughout 2020. These high growth disruptive companies. You got stuff like CCIV, which I don't think that's an ARK stock, but those types of meme stocks that have been super popular, those are the ones that are getting slaughtered. Not your traditional Dow Jones stocks, not your traditional S&P stocks, besides Tesla. The things that are getting hammered are those super overvalued, no real business kind of stocks. And so ARK is loaded with those, and that's why they've done so well. But now that there's a correction, they are leading the market down. And they have a similar head and shoulders break. There's also a subtle support line here that they totally blew through. They have broken through the 50-day moving average. They just absolutely blew through it, tested it, and reversed. So we have some very strong bearish move on RK. And the next, there is no support line until we get down to maybe around their 200-day moving average, which is 102. So they could continue to fall. Maybe they'll bounce up and retest, but that's a long way up to the support line. They might be in trouble. So what I did do is I bought just 2 puts on RK. I'm not going crazy shorting because I would hate for we have a big snapback and then you'll lose money both ways. However, if you are super bearish, you could do something like buying some puts on something like ARK. Or you might decide, hey, ARK has already moved a lot. It's more risky to buy the puts there. What will happen is if this continues, ARK started, and ARK and Nasdaq are kind of leading the way down. They are having their own fundamental problems, right? With the bond yields going up, people are going to reevaluate the PE ratio of these higher growth stocks, okay? So that is going to cause all of these quality companies or these not so quality speculative companies to be repriced at a much lower level. And all that pain and all that panic created by that dip is going to cause the rest of the market to follow, most likely. Now, if the NASDAQ were to just chill right here and just be done, then maybe the Dow and the S&P will hold up and you'll be fine. However, if this NASDAQ continues and ARK and stuff like that continues this downtrend, then you're going to start seeing S&P start to accelerate. So as you can see, when you look at the S&P, it's just broke its uptrend yesterday officially and has had a continuation day. It is still relatively close to its highs compared to what NASDAQ has done. So there's a lot more room to the downside for SPY. It hasn't moved yet. So if you think this trend is going to continue, maybe even a safer bet would be to buy puts on something like the S&P. Now, I think the NASDAQ will get hurt more overall, but it's already corrected a lot. So you can kind of choose how aggressive you want to be if you want to try to play the downside. The simplest, safest way, protect your portfolio with SQQ, or DXD is the inverse of the Dow. SDS, let me double check that, is the inverse of the S&P. So you could just pick whichever sector you are most weighted in, and if you're afraid we're about to have a crash, instead of selling all your stuff, buy some of these to protect your portfolio on the way down. Or even if you buy enough of it, maybe you'll make money on the way down if it goes down, but then you're betting another direction. If you want to be really aggressive, then buying puts will get you a much higher return on the crash, if there is a crash or just a correction, but it's much more risky because as soon as the stocks turn around, those puts are going to go to zero. So if you're feeling really aggressive, you could buy puts on Nasdaq, you buy puts on ARK, things like that. But it's definitely looking very bearish. We'll see if we get a snapback tomorrow. Who knows? Maybe Monday we'll get a snapback again. Because sometimes when you have these big, huge moves, it likes to bounce. My money would be that it's at a dead cat bounce, and then it'll turn back to the downside. Just because, I don't know, it just feels like the sentiment from listening to people on YouTube, listening to people on the news, it just feels a little bit different than the November correction, which was just some jitters, some volatility, a normal pullback. This time, I feel like there's a little more panic I'm seeing with people, especially with the Dow only being down a couple percent, and the Nasdaq leading the way. I don't know. I just feel like we could get a strong correction here, which would be great for the market going forward. Obviously, it's a lot of pain right now. So what is fueling this? Let's pull up the 10-year Treasury. And as you can see, the price action lately has been almost parabolic, okay? Normally, you don't think of parabolic and bonds together, right? So it's been this slow, steady trend of bonds rising off their bottoms. They were down to 0.5% interest over the summer. So insanely low bond yields. If you bought a bond, you're basically making no money. So there's no way for the prices to stay down there, right? So it slowly started climbing, and the market didn't care that much because, come on, a 0.77 interest rate, a 1% interest rate even. You know, why would you buy a bond for 1% when inflation is probably going to be higher than that, right? So why buy a ton of bonds and take money out of the stock market when you're getting almost no interest? So it really didn't affect the stock market too much. But what starts to happen is as the bonds start getting over 1.5, which is the S&P average dividend yield, some of that big money, the big institutional money, says, we want to take some of our capital and put it into a safe asset that will return us a higher dividend than S&P. So I've read that 1.5 is kind of a key level. If you get up to like 2 and higher, then you're really going to start having some selling, because you can get a 2% safe, almost risk-free asset of a bond, getting that 2% without having to risk it in the stock market. And so a lot of big money starts to go into bonds and be taken out of the stocks. So part of the reason why the stock market has been absolutely insane is because there's nowhere else to put your money to get any return. Well, now bonds are starting to get to the point where you can get a little bit of return. I know it doesn't seem like much, but big money, when they have big pots of money, you know, they do buy stuff like this. So anyway, the market starts panicking because instead of just doing the slow, steady climb it was doing before, where they can manage it, it started to accelerate. Okay, and this acceleration is what really scared people. So last week when it first dipped, we had a huge update and then a quick correction. So then the market was like, you know what, maybe we're okay, and it kind of snapped back. It's like maybe it's going to consolidate and come back. I actually thought with this quick turnaround, I was like, that was a little too far too fast. Most of the time when stocks do that, they kind of chill, consolidate a little bit before turn on. But nope, instead Jerome Powell starts talking and the bonds are just skyrocketing to new highs. So that is probably putting a lot more jitters that we're going to have a totally new environment. We're going to have to recalculate our discounted cash flows. We're going to have to recalculate what stocks are going to be the leaders and the laggers going forward for 2021. So definitely keep an eye on this 10-year yield. If this were to plummet, you might feel safer that the Nasdaq would bottom. All right. If this keeps climbing, then I'm betting that those charts the knives are going to keep falling. Okay. Not a ton of super actionable advice. I just wanted to point out that the technicals are breaking down, at least in the short term. Doesn't mean for sure it'll keep going down forever. Doesn't mean that it won't plummet 30%. Who knows? But things are definitely looking bearish, and I just want to give you a few ways to protect yourself. Buy SQQ if you think it's going to keep happening, or if you think you missed it in SQQ, then maybe the SDS or DXD to kind of get some of the other indexes on the way down, or even if you want to be aggressive, buy some puts. So anyway, that's a quick market update for tonight. Keep watching those yields, keep watching that Nasdaq to try to get a good feel for which way the market's going. Everybody keeps saying buy the dips, but once these dips start, I like to watch them, watch the VIX to see if it turns around. If the VIX is still climbing, I'm not buying the dip. If the trend is still down, see, Dow's holding up. But where's the Nasdaq again? Sorry, I keep clicking around all over the place. Yeah, if the SPY keeps falling, I'm not buying the dip. If the QQQs are keep falling, I'm not buying the dip until I see some price stability. Then I'm going to start selling puts and getting back in. Okay, so good luck to everybody. Hopefully your account wasn't too red today. Hopefully you can make a little bit of money with some of these shorts to heal some of your pain. And like and subscribe for more updates and more in-depth reviews on stocks. As the stocks get cheap, I'm going to start making videos on what I'm buying on sale pretty soon. So definitely like and subscribe to the channel to get more updates. All right, have a good night. Peace.